ticker symbol FAT. Andy, good to see you. Thanks for being with us. I know you have a lot of great restaurant brands under your umbrella. As you tell us about how you're battling the pandemic and trying to work on reopening, you can name some of the brands along the way as well.
Yeah, hey, Nicole. Great to see you again. Thanks for having me. Yeah, it's a lot of work right now to juggle the different rules in every state. We have really 10 different restaurant brands, 8 kind of large brands, and a couple of fast casual versions like Fatburger. That's our flagship brand in California. Ponderosa and Bonanza, the steakhouse chains across the Midwest and Northeast and Southeast. Hurricane Grill and Wings up and down the East Coast. Buffalo's Cafe in Georgia. Elevation Burger on the East Coast. So we've got a lot of different stuff going on, mostly on the QSR, fast casual, and casual dining side. And, there's just different rules in every state right now.
Well, we saw that, and no surprise, Emily, and obviously every company saw a decline on the 28th of May. Your company talked about a quarterly loss, the decline in revenue. Tell me about what your outlook is going forward. How are you breaking it down between now and September, now and December, because there's so much uncertainty. So I'm sure you're setting some sort of goals, whether you meet them or not, I guess that's another story, because the pandemic is a tricky one. So what is your outlook?
It's generally very positive. Customers are still coming to pick up to go and use the delivery services like crazy. The restaurants in the East Coast still have outdoor dining rooms open, some indoor dining rooms. So, our business on the casual dining side went from all the way down to 35% of normal. Now it's at 107% of normal. So customers have flocked back to our restaurants like at Hurricane Grill and Wings and Buffalo's Cafe. There's bars that serve food, there's dining rooms, but they're all outdoors. We have like screen porches and beaches with sand that have a kind of like a fake beach with the sand and you're at a restaurant. And so people can sit outside and feel comfortable, and then the employees are wearing the PPE. So that's done really well, and we think that will continue. On the burger side of things, Fatburger, Elevation Burger, sales are up in the 80% range of normal. We have a few locations like casinos that are still closed. You have those dining rooms in California that are closed. But our delivery and to-go services went from 40% of sales to into the 70s. So very strong in that market alone.
Yeah, and I know Express and trying to get stuff out as people are picking up, right? Because that's sort of the way for you to make money and also provide food so people can eat. They keep going to their favorite restaurants. I know that Fatburger and Buffalo's Express made the debut in the Lone Star State. Get it out, get it fast, and expand. Is that sort of your plan? How much expansion do you expect to do?
So we have a lot going on, very busy, just priced a big preferred stock offering on Monday. We have acquisitions planned, and we have also organic growth from stores opening. We've opened 13 or 14 new stores so far this year. We have 20 more under construction or that are ready to open in different states. We just opened in Alaska. We opened in Texas, as you mentioned. Both those stores are doing huge volumes. They've run out of food a couple of times. They've done such high volumes. So it's going very well. We are continuing to see growth of new unit development on the Fatburger side, Elevation Burger side. About to open in a week in Washington, D.C. in the National Zoo, which is going to be exciting for Elevation Burger. And Hurricane Grill and Wings, too, also a lot of development there. So this is going to be a big year for us. We've been looking for some acquisitions for some time, pre-COVID-19. Those same deals we're working on now, and I think that we're considering making them soon. With the proceeds from our offering, and we'll see what comes together here.
Yeah, and so Andy, what are your thoughts on some of the other burger chains that are obviously your direct competitors, but you're in the same business? McDonald's, QSR's, Burger King, Shake Shack, Wendy's, just to name a few. I guess you could put Jack in the box there. I don't know, are they burgers or chicken? But anyway, what's the point here for the whole group?
Well, look, everybody's taking their lumps hard, and it was great that the government did PPP loans. We are a 100% franchise system, so all of our 374 restaurants are owned by franchisees, and we view them as our customer. We have to make sure that they stay in business, they make money, and they live to fight another day, and they build more restaurants. And so we help them right away with getting PPP loans, getting better terms from like Cisco or US Foods, the national suppliers or distributors. We help them get rent deferrals from their landlords. We shipped PPP equipment to all of the franchisees so they had it for their employees so they would feel safe coming back to work. the customers would feel safe coming in. So, that's something that's important to do. And when you look at the competition, I mean, many of our competitors operate their own restaurants, company-owned stores. So they just have their hands full at an entirely different level than we do. Our job is to support the franchisee right now, and we're doing that.
Just quickly in 10 seconds, what are you going to do with your offering of preferred stocks?
Yeah, so we're going to retire a little bit of an older class of preferred, but we'll also use the proceeds for some potential acquisitions. And I think, prices are better now than they were before.